to be differentiated. I do think there's room for more than one, but the market is also picking winners and losers. Bitmine trades $3 billion a day. MicroStrategy trades $3.4 billion a day. I think the two of us represent 95% of all trading volume in the DATs. So if you look at the hundreds of DATs, the two of us are 90% of the trading volume. That means institutions really only want to buy us. You know, in terms of total market cap, you know, we are basically a large cap stock now. So we're going to be part of a lot of these major indices when they rebalance, which means we'll have passive flows. That really helped MicroStrategy too. And that's actually what sustains valuation premiums, because now you have someone who's buying every day.
Tired of missing out on life-changing crypto gains? Prepare for the ultimate financial revolution. One foundational asset is drastically undervalued, trailing its potential even as Wall Street and a $400 trillion tokenization wave demands its infrastructure. The forces are aligned, but the market hasn't caught on yet. The asset is Ethereum. Its guaranteed neutrality makes it the preferred rail for the new financial system. Join me now to discover how to ride this wave to the promised $15,000 price target. Subscribe, the YouTube channel, like and share. Tom Lee begins with Bitcoin. After being cautious for most of the year, he's now decisively bullish heading into Q4. Historically, Bitcoin performs strongest in the final quarter of the year, and now with the Fed turning dovish after months of tightening, Lee believes the macro environment has flipped from a headwind to a tailwind.
Well, a lot of it starts with our views on crypto. And, you know, I'm still bullish on Bitcoin. In the fourth quarter, seasonally, Bitcoin's strong, but now we have the Fed flipping dovish after being essentially hawkish all year. That's a tailwind for Bitcoin. So I think Bitcoin gets to 200 to 250,000 by the end of the year. And that aligns with Mark Newton's technical targets. Ethereum, as a price ratio to Bitcoin, should recover to its prior, let's say, either average or at least 5-year highs, okay? Using a $250,000 Bitcoin, that implies somewhere between 10 and 12,000 for Ethereum by the end of the year. But I do think Ethereum is going to exceed those prior highs, and that's why I think when we get to 12, 15,000, that's what you call, you know, real price discovery, but I don't think that would be the ceiling for Ethereum. In our view, Ethereum probably is a chain that had become underestimated. You know, it made its all-time high 5 years ago. So when we started the treasury strategy, Ethereum was around 1,300 and its all-time high was around 4,800. But that was a case in our minds where Ethereum's fundamental story was much stronger because number one, it is the second largest blockchain. It's the largest smart contract platform. It has a huge community of developers that, in my opinion, are really benevolent focused. You know, Ethereum is trying to improve the world. But I think people thought of it as less exciting than other platforms. But then along comes not only stablecoins, which we call the ChatGPT moment for crypto, but it's really the realization that this current administration in the US, the White House and Congress are really becoming pro-crypto, and Wall Street itself is embracing blockchains. And the blockchain they're doing most of the work on is Ethereum. So when I look at that combined with AI and tokenized agentic AI and robots are really going to create the need for like a token economy for robots. A lot of that will happen on Ethereum. In fact, President Trump today just talked about how he needs proof of human to protect us, and a lot of that work is going to be done on Ethereum. So you have two drivers for what we think are a super cycle. So to us at 1,300, Ethereum was kind of like a massive risk reward. Stablecoins are just tokenized US dollars right now. But we're going to be seeing tokenized equities and credit and real estate and loyalty points and intellectual property. Intellectual property is the largest component of US CapEx. That should be on-chain. So is it a $400 trillion market? And stablecoins are $200 80 billion right now. I think that there's room for plenty of blockchains to benefit. But I do think the idea of a fat protocol is important for people to keep in mind. That's what Union Square Ventures first wrote about. I don't know if you guys remember from 2011 or 2013, but as stablecoins are created on a layer one, that layer one captures the value. That payment rail concept is the exact same reason banks, as you put a deposit in, the value of the company actually equals your deposits because they make a loan with that deposit. So I think in many ways there'll be room for many blockchains, but the majority of this is taking place on Ethereum because I do think there's room for multiple, but Ethereum is a truly neutral chain. I don't think anyone ever feels that someone's got a fat finger tilting it in their favor. If you think about how Wall Street operates, they will only want to do and operate on a neutral chain. If one of the banks creates their own layer one, calling it, I don't know, too big to fail bank layer one blockchain, no one is going to feel that's a neutral blockchain because that's going to always tilt it in their favor. I mean, that's just how Wall Street operates today. If a bank is the axe trading a bond, they have perfect information and they use that against anyone else that trades it. So I think it's important for Wall Street to find a public blockchain that's neutral, and today the biggest one is Ethereum. Pantera is one of the largest investors in Bitmine, and they've been a great partner. So, and I do consult with Cosmo periodically. There's a lot of good information he has that he shares. I think that if you look at DATs, it's like this. It's no different than looking at any other business, which is that whether you're looking at social media or chips or gaming or media or clothing, consumers and investors probably only want to have 2 to 3 things that they consider differentiated stories. And so I think in the digital asset treasury world, that's going to be pretty true by token. So in Bitcoin, MicroStrategy by a country mile is a differentiated story. I mean, they're so big now, they have 3% of Bitcoin, but they'll always, in my opinion, have a NAV premium because it's got a sovereign put. I mean, the day the U.S. is serious about getting 1 million Bitcoin or another country, they're going to buy MicroStrategy. And in Ethereum, I think there is a lot of room for differentiation because Ethereum, one, it generates a native staking yield, and you can also invest in DeFi or also create payment rails around Ethereum. So I think there's room for more than one. Like, you don't have to just say there's going to be one survivor, but I think executing is really important. I mean, there's a lot of digital asset treasuries out there, and they're not all created equally.
He describes them as complementary, two halves of a broader digital monetary system. Bitcoin is digital gold, the reserve asset of the internet. Ethereum is digital Wall Street, the infrastructure layer powering global commerce, tokenization, and decentralized finance. He mentions that he's close friends with Michael Saylor, the CEO of MicroStrategy, and that their visions align. MicroStrategy dominates the Bitcoin treasury space, while Bitmine focuses on Ethereum, two strategies that institutions will likely adopt together.
The digital asset treasury world bridges 2 worlds. One is crypto, because it invests and buys a token. And so you have to be able to speak the language of the crypto economy. But then the other world that treasuries sit in is public equities. And remember, there's 5,700 stocks out there, 5,700. I mean, so just because a company does something doesn't mean the market cares. If you look at the stock market today, the top 30 most traded stocks are literally the only stocks that Robinhood cares about, or Schwab, or even JP Morgan. JP Morgan trading probably only cares about 10 stocks, and Goldman's desk only cares about 10 stocks. Institutional investors care about sector exposure, but they always buy the leader. So, MicroStrategy is one of the most liquid stocks in the market today. It trades $3 billion a day. Fortunately, Bitmine is one of the most liquid stocks today. It trades about $3 billion a day. It trades about as much every day as JP Morgan or Arista Networks or Google. We're really one of the most liquid names. And then I learned that in Korea, we're top 1, 2, or 3 in terms of trading volume. So I think that unless you're going to break into the top 30 as a stock, institutions may not pay attention because institutions want to have volatility, access to hedging through option chains, and Bitmine's a top 10 chain. And so if you're not in that zip code, institutions aren't going to pay attention. Michael Saylor is a very good friend of mine. In fact, I spent a lot of time explaining to him and thinking around Ethereum and Bitcoin, and I think we agree Bitcoin and Ethereum, first of all, are friends. We don't compete. But that our strategy is very different. I'm not competing. Bitmine is not trying to get an institution to buy us over MicroStrategy. In fact, we think an institution that owns MicroStrategy also has to own Bitmine because we are different parts of the crypto economy. Ethereum to me is the new Wall Street. In 1971, the dollar went off the gold standard. Okay. Now, everyone thought in 1971 the play was gold. But actually, in 1971, the dollar became synthetic. It no longer was backed by anything. And that's when Wall Street stepped in and said, okay, we got to make sure that the euro, or well, the euro didn't get, the German franc or whatever, German mark or the French franc doesn't become dominant. So Wall Street built products to make sure everyone used a synthetic dollar. Wall Street was the big play in 1971. In 2025, we're making everything synthetic. We're starting with tokenizing the dollar. And then, as you know, Wall Street's going to tokenize equities and everything I just listed. Massive opportunity. Ethereum is in a super cycle because of that. But Bitmine can play a role because it can become a payment rails. It could become almost a bank. It can help as by owning the largest holder of Ethereum today. It's a kingmaker on the DeFi. We were doing moonshots. We invested $20 million into 8Co, which is investing in the WorldCoin, and that already, in just less than 10 days, has already returned more than 10 times our investment. So I think we are becoming a financial infrastructure company. I think to be differentiated, I do think there's room for more than one, but the market is also picking winners and losers. Bitmine trades $3 billion a day. MicroStrategy trades $3.4 billion a day. I think the two of us represent 95% of all trading volume in the DATs. So if you look at the hundreds of DATs, the two of us are 90% of the trading volume. That means institutions really only want to buy us. In terms of total market cap, we are basically a large cap stock now. So we're going to be part of a lot of these major indices when they rebalance, which means we'll have passive flows. That really helped MicroStrategy too. And that's actually what sustains valuation premiums because now you have someone who's buying every day. Some researchers about this, like what's too much concentration? 5% is where you get a power law benefit. Not that it starts to break down. These same researchers have actually told us that it's pretty safe to go to 10% of Ethereum. And as you know, Ethereum, no one controls it. I mean, if some entity owned 10%, and of course that entity is a permanent capital vehicle and is going to be staking and doesn't want to get slashed, so they're going to make sure they're validating properly, I'd actually think it really secures the network because now all of a sudden a DAT, by the way, is completely decentralized, right? It's owned by shareholders. Like Bitmine has 270,000 shareholders. That's actually who controls Bitmine. It's not centralized. I mean, it is actually, I'd argue, a way to ensure perpetual decentralization because now the shareholders own Bitmine they control how the stock does, and and if the stock's valuation gets weak, then the DAT loses its ability to, raise capital. So it's truly decentralized.
Bitcoin's scarcity and Ethereum's neutrality form the foundation of a new global system, one that's open, programmable, and far more inclusive than the old one. With the Fed turning dovish, liquidity returning, and institutional money pouring in, Lee sees this as the beginning of crypto's next supercycle, a phase where Bitcoin could touch $250,000 and Ethereum could surge beyond $15,000 as tokenization goes mainstream.